How I actually think about this is I think the opportunity here is the space is 2.5 trillion today. I think it's going to 100 trillion in line with other asset classes. That's the biggest macro trade of all time and the largest generation of wealth in all human history. That's the trade. How you want to slice and dice that? Yeah, how you want to slice and dice that's up to you. What risk tolerance you have, but that's the trade.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Raoul Pal explains how global liquidity cycles could propel crypto to a staggering $100 trillion market. They break down the everything code concept, explaining how broader economic trends are setting the stage for crypto's explosive growth.
Yeah, so very simply, something I call the everything code is from 2008, we had a global debt reset. Now, as opposed to letting go of all the debts, what they did was cut interest rates to zero and said nobody needs to pay interest rates. Okay, that was a huge advantage for the system, and everybody reset their debts for this 3 to 5 year sector. So then the debt refi cycle, when they have to refinance the interest payments and the debts, drive the business cycle. The business cycle's always been the credit cycle. So now it's become almost perfectly 4 years. The only other time in history it was perfect like this was back in the 50s and 60s after World War II and the financial repression then. So there's financial repression going on, but it goes in this 4 year cycle. The 4 year cycle happens to be the crypto cycle, the US election cycle. It's all the same thing. So it doesn't matter what you label it, but there is a cycle that's going on, and we're just coming into it now, which is we've now got $10 trillion of debt to refi. You have to refi the interest payments. Usually what they do is they inject enough liquidity into the system to pay for this because there's not enough GDP growth to pay for it all. And so we go on to the next cycle. So that's really what drives all assets right now. Everything is basically correlated. But out of that, there's one asset that does a lot better because it's got the secular adoption curve, which is crypto, plus the macro tailwind of debasement of currency and the cycle. So that's where we are in the cycle now. Zoning into election year, well, this is when they start giving out money. They also have a lot of refi to do. So it tends to be a very good back end of the election year. And then the following year tends to be very, very strong too. But this is a global thing as well. Every major central bank is refining their debts in the same cycle. The Europeans, the Japanese, the Canadians, the Brits, and the Chinese. Now, what you always look for in these refi cycles is who's the weakest link, because they're likely the ones to do the most stimulus. It's probably China this time around. Just came on the tapes just now. I think Felix actually just tweeted it out. There was a Bloomberg story that I've been talking about for a while, is the US and China have agreed to kind of help each other. So we know the Chinese need to stimulate. Well, they've said, let me see if I can find the exact tweet. It said, it was exactly what I've been writing about in GMI. They said, China's central bank says a meeting in Shanghai produced an agreement with the US Treasury to appoint contact people to deal with any future financial stress events.
Bitcoin experienced a 3.4% decline between August 26 and August 27, following a breach below the $63,500 support level, which it held for 2 days. This downturn can be partly attributed to deteriorating macroeconomic expectations, but also reflects decreased activity on the Bitcoin network. Traders are questioning whether these factors are fully priced in and how much further Bitcoin's price might fall if the $61,000 support level fails. Crypto and stock market trader Blockchain predicts that Bitcoin's price could rise to $65,000, having previously accurately forecasted a drop to $61,000. According to a post on the X social network, the potential price increase could follow stronger than expected Nvidia earnings, leading to a smart money movement to liquidate late shorters, traders who placed leveraged bets on BTC's decline. However, strong performance in tech stocks doesn't necessarily bode well for Bitcoin, and some analysts suggest the opposite effect might occur. Nomura analyst Nakamatsuzawa suggests that upcoming tech earnings could challenge investors' expectations of U.S. interest rate cuts. Companies such as Nvidia, CrowdStrike, Salesforce, and HP are set to report earnings on August 28, while Autodesk will present its results on August 29. According to Matsuzawa, if corporate profits remain robust, the odds are that subsidies for tech stocks could diminish, as reported by CNBC. Currently, the bond market is pricing in a 100% certainty of at least a 0.5% interest rate cut by the year-end, as indicated by the CME FedWatch tool. Additionally, there is a 71% probability of the Federal Reserve cutting rates by 0.75% or more, so any reversal of this expectation could trigger a stock market correction. This potential shift explains why Bitcoin investors are concerned that such a reversal might negatively impact BTC's price. The U.S. home price increase, as revealed by the S&P CoreLogic Case-Shiller Index, showed a 5.4% rise year-over-year in June. Brian Luke, head of commodities, real and digital assets at S&P Dow Jones Indices, noted that the rise in home prices outpacing the consumer price index is adding pressure to the political agenda ahead of the election season, as reported by Yahoo Finance. In essence, the recent housing market data does not support aggressive interest rate cuts, which is unfavorable for risk-on markets, including Bitcoin. Some analysts argue that Bitcoin's correlation with the traditional stock market has been low, which is true. But when overall risk perception increases, traders tend to seek safety in assets they consider secure, such as gold and highly profitable companies.
Generally, every time I've sold, it's been a mistake. And actually, what you should do is look forward to the bear markets and add to them. Really, I mean, I first bought Bitcoin at 200. If I'd have just kept that position, I'd have been much richer. It's stupid, right? But you get absorbed by this cycle mentality. Now, by all means, de-risk a bit, take some lifestyle chips off the table, do something. But this trade is much bigger than a cycle. And you think you're going to sell at the high and buy at the low. You've got another thing coming. You won't. How I actually think about this is I think the opportunity here is the space is 2.5 trillion today. I think it's going to 100 trillion in line with other asset classes. So that's the biggest mega trade of all time and the largest generation of wealth in all human history. That's the trade. How you want to slice and dice that? Yeah, how you want to slice and dice that's up to you. What risk tolerance you have, but that's the trade. When I first did the first piece of work on Bitcoin back in 2013, I said it was worth $1 million.
Yeah.
And I don't think that's wildly wrong. If Bitcoin's at $1 million, the space is somewhere close to my target of 100 trillion, or maybe it's 50 trillion. It doesn't matter. It's just gigantic. I've also got an asset management firm that's a crypto fund of hedge funds, so called Exponential Age Asset Management, XPAM. And the other part of this cycle is there's no secondary liquidity in crypto markets. It's bizarre. So what you get is all these early stage people, they dump the tokens, and then there's a few Asian trading shops, a few market makers, and a bunch of retail. But there's literally $10 billion of professional capital in crypto markets. And Dan and I grew up in the hedge fund industry, and that's a hedge fund stream. There's not enough capital in the space, means lots of opportunities. There's all these dislocations from new tokens coming out, going down 80% because people get liquidity. And these hedge funds can sort out through all the shit and say, hey, this is actually a good opportunity, stuff like that. And really that whole thing is getting us from the idea of this is to get us from the 2.5 trillion to the 100 trillion, give it to the 12 of the best, 14 of the best hedge funds in the world, let them do the allocation.
Beyond the macroeconomic environment, part of the diminished investor interest in Bitcoin stems from declining network usage metrics. First, the 7-day active addresses have dropped to their lowest level in 2 months, typically indicating reduced retail activity. Even though whales and institutional investors may be accumulating, the data does not suggest increasing adoption by the broader audience. For the week ending August 26, there were 668,732 active addresses either sending or receiving BTC on the Bitcoin network, representing a 4% decline from 2 weeks earlier. Similarly, Glassnode data shows that the median transfer volume has decreased to 0.00376 BTC, the lowest since December 2023. In summary, there are fewer users, and the average transaction size on the base layer has been declining. Ultimately, the recent weakness in Bitcoin's price can be attributed to the reduced likelihood of the U.S. Fed fully implementing a 0.5% or 0.75% interest rate cut by year-end. This increases investor risk aversion as inflationary pressures continue to concern the government, and on-chain data points to lower network activity. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.